Welcome to the Explainer. Today, we are taking Godrej Agrovet's dense, 15-page audited financial results for FY26, and, well, we're translating them into a clear, straightforward corporate report card. If financial disclosures usually make your eyes glaze over, stick around. We're going to break down the whole shebang straight from the source.
Here's our game plan. We'll start with the big picture, followed by a segment-by-segment breakdown. Then we'll look at their strategic acquisitions, how they're rewarding shareholders and employees, and finally, wrap up with cash flow and debt.
Section 1. The big picture. Bottom line up front. Let's answer the most important question right out of the gate. Did Godrej Agrovet actually have a good year?
Well, to answer that, just look at this headline figure, 10,232.68 crore rupees. That is a massive number. It represents their total consolidated revenue from operations for the entire fiscal year. Crossing that 10,000 crore milestone? Yeah, that sets a very confident stage for everything else we're going to look at.
And you can really see that momentum when you put it side by side with the previous year. They confidently outpaced FY25, growing their top line from just under 9,400 crore to smash right past that 10,000 crore mark. That is some undeniable top-line growth right there.
But, revenue is really only half the story, right? We need to see how this translates into actual earnings. And looking here, their bottom-line profits saw a very healthy year-over-year jump, moving from roughly 403 crore in FY25 up to 445.18 crore in FY26. So they're making more sales, and crucially, they are keeping more of the profits.
Moving on to Section 2, segment-by-segment breakdown. We know they pulled in over 10,000 crore, so let's trace exactly where that money came from.
Now, Godrej Agrovet operates across several really distinct agricultural sectors. So you might be wondering, where exactly does Godrej Agrovet make its money? Which segment is doing the heavy lifting? Let's take a look.
Okay, so despite having a highly diverse portfolio, spanning vegetable oil, dairy, crop care, and poultry, there is one undisputed heavyweight champion here. Animal nutrition is absolutely dominating their revenue stream.
Digging into the raw numbers, animal nutrition generated an incredible 4,941.54 crore caro in FY26. I mean, think about that. Nearly half of the company's total revenue was generated by just this one single arm. Now, it is worth noting that this figure actually includes a 33.48 crore profit from a land sale. But honestly, even if you subtract that one-off event, animal nutrition is still the undisputed core of their operation.
Section 3, Strategic Acquisitions and Moves. Let's get into the extracurriculars of the report card, because this year's financial growth was paired with some pretty aggressive corporate consolidation.
Throughout the year, the company was busy. They actively expanded their footprint and really tightened their grip on key subsidiaries. The major moves involved three specific entities: Creamline Dairy Products, Godrej Foods Limited, and Aztec Life Sciences Limited. Let's see how they consolidated their stakes.
The Creamline Dairy situation is particularly fascinating. Back in early FY25, Godrej Agrovet made a massive 708.58 crore rupee investment for a 36.79% stake. Fast forward to the end of FY26, and they are now sitting at 99.78% ownership. They are essentially in full control of this dairy subsidiary now. And we see a similar appetite to double down on winning bets with Aztec Life Sciences Limited. When Aztec held a rights issue in July 2025, Godrej Agrovet eagerly jumped in, investing nearly 199 crore rupees. That move successfully bumped their controlling equity stake up to 67.03%.
Section 4, Rewarding Shareholders and Employees. Financial growth is great for the corporation, but how does this success actually translate to the people involved? Well, if you're an investor, this right here is the magic number you want to see, 110%. The board of directors recommended a very generous final dividend payout at a rate of 110% for the financial year.
So, what does that mean in real terms? Godrej Agrovet's equity shares have a face value of 10 rupees. A 110% final dividend equates to exactly 11 rupees per equity share. It's a direct, highly tangible way the company is passing the rewards of a profitable year right back to its retail investors.
But hey, they aren't leaving their internal team out of the celebration either. Under their Employee Stock Grant Scheme 2018, the board allotted 30,973 new equity shares to employees. On top of that, they granted 50,507 entirely new stock options. Since these options vest over 3 years, it's a pretty smart strategic move to lock in their top talent and incentivize long-term loyalty.
Finally, Section 5, Cash Flow and Debt.
We've seen the profits and the payouts, but what does the overall structural health of the balance sheet actually look like? If we pull the vital signs from their massive statement of assets and liabilities, we see a foundation that is actively expanding. Total assets grew substantially, jumping from FY25 to reach 6,170.19 crore in FY26. Meanwhile, their total equity is standing strong at 2,163.66 crore.
However, we always got to check the leverage, right? Their gross debt-to-equity ratio did increase slightly, moving from 0.49 in FY25 to 0.68 in FY26. So while their overall assets grew beautifully, they did take on a bit more debt relative to their equity. That makes sense, though, when you factor in that aggressive expansion and acquisition strategy we covered just a minute ago.
Bringing it all back to the ultimate bottom line for the individual investor, let's look at the basic earnings per share. This metric saw a very solid, healthy increase, rising from 22.35 rupees in FY25 up to 24.58 rupees in FY26. So, tallying it all up, what's the final grade? Well, it was, without a doubt, a highly successful year. The report card shows robust revenue growth smashing past that 10,000 crore mark, absolute dominant performance from their animal nutrition segment, and some seriously aggressive subsidiary consolidation.
Which leaves us with one final thought. With key subsidiaries like Creamline Dairy now fully integrated, what is Godrej Agrovet's next major growth engine going to be? Will they pivot to a totally new sector, or just double down even further on animal nutrition? Keep a close eye on their next moves. Thank you for joining me for this explainer. I hope this breakdown made the data a whole lot clearer. Until next time.